The following is brought to you by goldseekmint.com. Silver and gold bullion directly from the mint. goldseekmint.com.
Welcome to Cambridge House Live. I'm Vanessa Collette here at the Sprott Symposium, and we're thrilled to have Randy Smallwood here with us today, President and CEO of Silver Wheaton. Welcome, Randy. Great to have you here.
Glad to be here. Thanks, Vanessa.
Now, Randy, in this kind of environment, you must have tons of companies knocking at your door for finance. How do you decide which ones to take a risk on or which ones to invest in?
You know, our company's always focused on the assets and the asset quality, and so that's the most important attribute of any investment that we make, is how good is the underlying asset. It's not so much the company, it's the underlying asset that's important. So it's pretty easy to sort of separate the good ones from the bad ones.
Now, you bought into Sandspring Resources, so what made you make that decision?
As I said, quality of the asset. When you sit and look at the team behind Sandspring, there's a good, strong technical team there. The work that was done, we felt was better than average in terms of that. The project has excellent appeal. It's in a good jurisdiction, so quality of the asset, quality of the team.
Great. Now, you have a number of projects in development. Which one do you see being in production first?
Constancia is very close to turning on the switch. Hud Bay down in Peru, running the Constancia project. They're hoping to start moving ore through the mill sometime in September this year. So fingers crossed. We've been patiently waiting for it and looking forward to it.
Now, we've seen some projects have delays in the last few years. Have you changed your investment strategy at all because of these delays?
Well, no, because we're actually pretty well protected in both cases. With respect to Pascua-Lama, we receive silver from other Barrick mines until Pascua-Lama satisfies the completion test, and that goes till the end of 2016, but we're getting very well compensated for those delays. With respect to Rosemont, we don't put any investment in until they've received their permits and start construction, so it hasn't cost us anything, all these delays. And so I think the approach that we've taken is showing that it's been the correct approach.
Now, for investors who are not familiar with the model, your model mitigates risk in a number of different ways. Can you tell investors a little bit more about that?
Well, the biggest difference between us and a traditional mining investment is the fact that there's no cost risk. When you're investing into a mining company, you're looking for, it's the margin that is the real value of that mining company. And with us, that's two variables. That's the price of the commodity and then the cost to produce that commodity. With a streaming company like Silver Wheaton, the cost is fixed. We know what the costs are, we know what the capital costs are, we know what the operating costs are. It delivers so much more confidence to the shareholders, to the investors out there.
And then you don't have the foreign currency risk or exchange rate risk either.
That's right, yeah, all of our contracts, we have silver, we have physical metal delivered to us, and so these are metal contracts. There's no exchange risk from different countries wherever that silver and gold is being produced.
Now, you've been with the company since the very beginning. What are some of the lessons you've learned in the last decade?
How important quality of asset is, how important it is to do serious, strong due diligence and make sure that these investments, that these assets will deliver over all cycles. When commodity prices drop, you want the metal mines to still be economic enough to be delivering metal to you. So quality of assets, it just continually comes back as being very important. I think if you look in the peer group, you can see how some other companies have made mistakes in that space, and we're pretty happy with keep making that a clear focus.
Well, your company naturally is pretty reliant on the silver price. So what do you see happening in the silver market?
I love precious metals as a whole. We like silver a little bit better. It's got a higher beta. It's got half of it is consumed. I consider it the affordable precious metal. Some people call it the poor man's gold, but it's the affordable precious metal. I think it does have broader appeal in that space. But the consumption, the areas of consumption, is still going strong. So I am still a very strong believer in precious metals as a whole, and the fact that they will be a store of value and they will provide a very good, and when I look at worldwide currencies, very comfortable with precious metals as being a place to invest.
Well, speaking of that, let's talk a little bit about the gold that you have as well. How do you balance the gold and the silver?
Well, as I said, we are silver focused. We do like silver a little bit better. Gold, though, has a lot of the same characteristics and a lot of the same attributes that silver does in terms of moving forward. And so we don't have a particular focus in terms of a split between gold and silver. Again, it comes back to the assets and making sure that we invest in the best available asset out there, the best quality asset, to ensure that we deliver a return back to our shareholders, irrespective of whether it's gold and silver. We do see more silver opportunities just because so much silver is produced as a byproduct. 70% of worldwide silver is produced as a byproduct from copper mines, from lead zinc mines, from gold mines. And so there's plenty other companies out there that are looking for funding that are, where it's not a core product and it's available for purchase under the streaming contract.
Well, knowing that you look at assets primarily, I've heard Eric Sprott say that to him the platinum sector looks a lot like silver did 10 years ago. So what are the chances of you guys getting into platinum?
Well, we've looked into it. The challenge is that most platinum and palladium, most of the PGM group, or platinum group metals, political risk is a challenge. Some of the best mines are in politically risky jurisdictions, and because we make long-term investments, we're not looking for a return in 3 years or 5 years. We're looking for long-term wealth, long-term investments in our company. We're very sensitive to political risk, and so we have to be, that's one of the challenges that we have, is that there's not a lot of opportunities in that space that doesn't come with political risk.
Now, looking at jurisdictions, you're mostly in the Americas and Europe. Do you have a policy of not going into Australia or Africa, or what's the...
Spend as much time as I can looking in Australia. We're comfortable in Australia. We just haven't been able to close any acquisitions. We've made several proposals into Australia. Silver is generally found in the Americas. You don't see a lot of silver in Africa or Brazil, but with our focus, our broader focus into the gold, that does open up some opportunities in Africa. There are certain places we'd invest, but again, going back to political risk, that's the most important thing, is making sure that we're in politically stable jurisdictions.
Right. Now, you've, by all accounts, have had quite an impressive run at Silver Wheaton. Why do you think other companies haven't been able to duplicate, the success that you've had?
Boy, I sound like I'm beating the drum here again, but quality of projects. Making sure that you invest into good quality projects. I have to reinforce how important that is. When you invest into these assets, it's a decision that you have to live with for the life of that project. So you better make sure that it's got good, healthy operating margins. If our partners aren't healthy, we're not healthy. So we'll want to make sure that they're good, strong mines.
Now, what would you tell an investor who was looking at investing in Silver Wheaton or a silver ETF?
A personal pet peeve of mine, actually. ETFs. What does an ETF deliver to you? It delivers to you a commodity. In fact, you pay a pretty healthy fee for those for that commodity. Silver Wheaton, not only does it deliver the commodity, because of the lack of cost risk, you're still getting that firm exposure, but we know what our operating costs are, we know what our capital costs are, so it takes the cost risk out of the equation. But not only that, we deliver leverage, we deliver organic growth, we deliver accretive acquisitions, and we pay a dividend. When you add that all up, it just makes absolutely no sense to be into an ETF. I understand the reasons for going into an ETF, and it's because shareholders have been upset or frustrated with the mining industry as a whole in terms of being able to deliver margins. We don't have that challenge with our company. If you're interested in the commodity, we think that Silver Wheaton delivers the best exposure to that commodity. Streaming is the best way to approach that. So it's as you can tell, it's something that I find frustrating in terms of the activity into the ETF. I think we deliver a much better product for a much better rate.
Well, you certainly build a strong case. What can investors be looking out for in the next 12 months from you guys?
Well, our business is always looking. I mean, the mining industry as a whole always needs capital, so we're always looking for new opportunities, and we'll continue to try and do that. I stress the quality. I stress being accretive to our shareholders, and so although we're always putting out proposals, sometimes they don't come forward. So I can't guarantee new acquisitions. I'll never guarantee, because we'll only do it in the right situation. But what I can assure you is that our team will continue to focus to build value and to build Silver Wheaton into what I consider the best option for investing into precious metals.
Awesome. Well, it was great having you here with us today, Randy. Thank you for stopping by.
Thank you.